On March 4th, 2025, the United States imposed substantial tariffs on imports from Canada, Mexico, and China, marking a significant escalation in global trade tensions. The broader Topix index also closed down 7%. Automotive companies were particularly affected due to the appreciation of the yen, with Hino Motors experiencing a 3% drop. Other significant declines included Advantest, SoftBank Group, Fast Retailing, and 7&I Holdings. In the United States, Wall Street experienced notable declines. The S&P 500 fell 2%, the Dow Jones Industrial Average dropped 670 points, and the Nasdaq slipped 4%. Retailers like Target and Best Buy experienced declines due to concerns about higher prices impacting consumer sales. The tariffs are expected to lead to higher prices on a wide range of consumer goods. Imports from Canada, such as grains, meats, dairy products, fruits, vegetables, vehicles, machinery, and equipment, will see price hikes. Automobiles in particular will be impacted, with estimated production cost increases up to $12,000 for North American manufactured vehicles. Imports from Mexico, including agricultural products like vegetables, beer, and avocados, as well as vehicles and automotive parts, electrical machinery, and more, will also be affected. These measures, initiated by President Donald Trump, include a 25% tariff on goods from Canada and Mexico, with a 10% tariff specifically on Canadian crude oil and energy products. Chinese imports such as consumer electronics, home appliances, toys, and footwear are expected to face substantial price increases. Businesses will have to decide whether to absorb the costs, change supply chains, or directly pass them on to consumers, leading to near-term price adjustments. Economists warn that these tariffs will disproportionately hurt U.S. consumers, particularly lower-income households. The revenue generated from these tariffs, aimed at addressing trade imbalances and border control issues, will create a regressive tax, affecting those with lower income more severely. The trade war is expected to cause a ripple effect, potentially leading to reduced consumer spending in other areas, job cuts, and an overall economic slowdown. The eventual impact on American consumers remains a contentious issue, with a significant proportion of U.S. shoppers opposing the tariffs and anticipating changes in their shopping behaviors. President Trump plans to defend his trade policies during his address to a joint session of Congress tonight. The United Auto Workers Union supports the tariffs, viewing them as a remedial measure against unfavorable trade deals. Meanwhile, U.S. retailers and automakers warn of increased production costs and consumer prices. Democratic lawmakers are divided over how to respond to Trump's speech, with some planning to attend and others opting for protests or boycotts. Additionally, tariffs on Chinese imports were increased from 10% to 20%. Federal workers, particularly those in key sectors, are worried about mass layoffs initiated by Trump's Department of Government Efficiency, led by Elon Musk. Polls indicate declining public approval of Trump's presidency, with many Americans believing the country is headed in the wrong direction. The Indian rupee closed slightly higher at 87, 26.50 against the U.S. dollar, up 0.1% despite the new U.S. tariffs. Asian currencies rose between 0.1% and 0.6%. The U.S. tariffs dampened global risk appetite, causing declines in global stocks and bond yields. State-run banks' intermittent dollar sales supported the rupee amid persistent outflows from local equities, with overseas investors selling over $14 billion of Indian stocks in 2025. The Canadian dollar and Mexican peso weakened, while the offshore Chinese yuan rose 0.3%. The dollar index fell 0.2% to 106. 3. As U.S. bond yields dipped to their lowest level since October, with market expectations of 3 Federal Reserve rate cuts in 2025 due to concerns about the U.S. economy. The escalation of tariffs has prompted discussions among economists and policymakers about the potential long-term effects on global trade dynamics. Some analysts suggest that prolonged trade tensions could lead to a restructuring of international trade agreements and alliances. The implementation of these tariffs has raised concerns about potential economic repercussions, including increased consumer prices and disruptions to international supply chains. Businesses may seek to diversify their supply chains to mitigate the impact of tariffs, potentially leading to shifts in global manufacturing hubs. In response to the U.S. tariffs, Canada announced 25% tariffs on $30 billion worth of U.S. goods, with plans to extend these measures to an additional $125 billion in the coming weeks. Mexican President Claudia Sheinbaum indicated that detailed retaliatory tariffs would be unveiled on March 9th. These escalating trade tensions have raised concerns about potential economic slowdowns and increased consumer prices across North America. The tariffs have had immediate effects on global financial markets. Japan's Nikkei index fell by up to 2.6%, its lowest level since September 18th, before closing with a 1.2% decline at 37,331.18.